What's going on, folks? This is Shadow Stars coming at you with another video. This is going to be part 2 of the video that I'm uploading for today. Part 2 of the video, I'm going to be covering the whole situation of the shareholders meeting that should be occurring, and with some of the proxy materials probably being sent to you probably in the next 2 to 3 weeks. Currently, we're still waiting on that HSR waiting period to end, which should be in about 2 weeks or so, if it follows that general, the average waiting time. So without further ado, let's cover some of the basics. So kind of want to start from the beginning and talk about where it all starts. So the first part is, we know that there is going to be a shareholder meeting. We know that all the shareholders of AMC, so whether you hold shares of AMC, whether you hold shares of APE, you're going to be able to vote for some proposals that the AMC Board of Directors is going to bring up. So the first thing is they're going to vote on to increase the authorized number of AMC common shares to permit the conversion of APE units into AMC common shares. So first proposal, you need to allow for more AMC shares to be authorized so that when you vote for the combination of AMC and APE, there's enough AMC shares that exist so that it can be done. We know the second part, we're going to call for a reverse split of those AMC shares, 10 to 1. So every 10 shares would end up equaling 1 share of the new AMC common shares. And so that to adjust authorized ordinary share capital after giving effect to the above proposals, so you need those two to go through, AMC would have the same ability to issue additional common equity as it currently has to issue additional APE. So basically, not only do you need to just authorize enough shares so that you can convert all the APE back into AMC, you would want this proposal is, if passed, is going to allow AMC to do further dilution. So now there's going to be people on one side saying that, yes, we need a vote for all of it. And some folks that will say, oh, vote no for all of it. And I'm sure there's another perspective where you're somewhere in the middle. So there's a couple things I want to talk about. First of all, if you didn't watch the first video, the first part of today's video, I would suggest that you do so. But for folks who haven't, I'm just going to give you a brief TLDR, kind of a brief summary of what was covered. That first video, I covered what I thought AMC's situation could look like at the end of quarter 4, 2022. So December 31st, 2022, what's AMC looking like? And there's some little bit more digging I did, a little bit more research on some updated figures. So if you didn't watch that, if you didn't watch the first video, you won't understand some of the rationale behind it. So I'd suggest you go do so, but also incorporate some of the new information I included here. So the quick TLDR is that quarter 4, I'm based on calculations to projections, looking at how the domestic box office did and various other factors, profit margins, other news, etc. I'm thinking that AMC would have lost about another $215 million over the quarter 4, 2022. Now that is a significant amount of cash burn. But I do give the benefit of the doubt, and my calculations show that they were able to reduce the cash burn a little bit versus what occurred in quarter 3. Now, the interesting part to pay attention to is really going to be their cash equivalents, their cash on hand. We know that quarter 3, we ended at about $684 million. Quarter 4, doing some more updates, best case scenario, I'm thinking around that 640 million mark, cash and cash equivalents. So how did I come to that figure? Well, we know that how much money they had in end of quarter three. We know roughly how much money that they're going to be burning quarter four. Then we got to factor in news releases such as we know how much they raised through their APE at the market program offering. We know that through the sale of 125.9 million APE. That's what they did through the whole offering so far as of December 19th. But during quarter four, they raised 153.2 million cash. Sure, you'll have to subtract a couple million here and there for the fees and commissions and all that. But they sold 123.2 million APE. We also know that through this deal with Antera, they sold, where is it? Where is the exact figure? 34. No, is it not in that filing? Okay, so it should be here. 34.9. Oh, is it? Wow, it doesn't show it here either. But basically, this 60 million APE that they purchased, that cost them approximately $34.9 million. If you do the 0.582 times 60 million, so pull up a calculator, 0.582 times 60 million, $34.92 million. So we know that amount was paid to AMC. We know the second part of the deal, the second tranche, we know that the approximately 106 million APE, we know that hasn't gone through yet. So that additional $70+ million not given yet. And we know that the 100 million debt equity swap for approximately 91 million APE hasn't gone through yet. And we know that through the filing, through the 13D filing, we know what Antera's current position is, and we know approximately what the outstanding shares of APE is. So that all leads to approximately $642 million. So actually that cash on hand balance is not that much lower than what it was Q3. That's going to help hide how much money they burned through quarter four. Now, also covered in that first video was the approximation of how much money what AMC needs to do on a quarterly basis to break even. And one of the reasons why I track the domestic box office performance so heavily is this will give you, it's an indicator, it's information that'll help clue you in as to how the quarter is going to perform, how the quarter is going to go. We know so far January, they're sub $500 million. That $500 million mark will probably be breached because they still have more than 10 days? 3, 6, 7, 8, 9 days. They have 9 days left. 9 days, I'm sure they'll make more than $3 million a day. We have the weekend, so it's going to breach that 500. But the question becomes, that break-even point says they need to do, when I'm giving generous discounts and considerations, 2.3 billion domestic box office. We know how they did in quarter 2 2022 with 2.3 billion domestic box office. They were still at a net loss of $121 million. So 2.3 billion, divide that by 3 months in a quarter, January, February, March. Each month needs to average $766 million. In pre-pandemic, sure, that was doable. 2019, you're averaging 800 mil. 2018, 952 mil. 2017, 970 mil. Doable pre-pandemic, but we know that the content is not quite there yet. There's still a backlog of content that's going to be pushed out. So that first quarter, you know that you're not going to be breaking even. So what can you expect? If you repeat quarter 3 performance, 1.9 billion, what's that come out to then? 1.9 billion. What do you need to do on a monthly basis? 641. So that might be doable. You might be able to average 641 million a month. It might be a little difficult, perhaps for January, but February, March could come out stronger. So your average might be around there. But nonetheless, you are still burning over $200 million a quarter. So that all plays into your cash, your liquidity. If you end quarter 4, end of the year 2022, with 642 million around there, you burn another 200 million in quarter 1 of 2023, you sit around that 400 million mark going into Q2. Your Q2, you might finally be able to break even. But what happens when you go into Q3 again? 2023. Remember that theaters are pretty cyclical. Your quarter 1 and your quarter 3 are pretty slow. Your quarter 2 and your quarter 4 are usually much better. It's just timing of the releases. Q2, Q4 just tend to have the bigger blockbusters. If you break even Q2 2023, but you're still likely to be burning money in Q3 2023. So that all factors into you need more money in your war chest. Best case scenario, you have around 400 mil going into Q2. Q2, you basically break even. Q3, if you're not able to do as well, you might burn another couple $100 million. So that means dilution needs to occur. So this is where the whole breakdown needs to be considered. This whole proposal of combining APE, putting APE back into AMC, doing a reverse split, and allowing the ability for dilution to occur. When the whole purpose is you need to understand the financials of the company is not yet profitable. It needs money to survive. It needs to buy time for content to ramp up, for more people to attend the theaters, for more people to spend money at the concession stands. To do that, they need to raise money. They're going to raise that money through dilution. So the question becomes, how are they going to dilute? Where are they going to get that dilution? Is it going to be through APE, or is it going to be through when you combine AMC and APE? We know that AMC hovers around that $5 to $6 range. We know APE hovers in that $1.50 range, maybe $2. Either way, there exists a price discrepancy between AMC and APE. Right now, you don't have the authorization of many more shares to dilute AMC. So you can't really raise more money using using AMC dilution, Class A common shares dilution. You would have to put forth a proposal to allow for the increase of AMC. We know that was previously proposed, but that was pulled back. Right now, AMC has the authorization to dilute more APE. They have another, 40 million preferred shares? So that's, 4 billion more APE, I think? Because it's 1/100th, right? But If APE is only at $1 to $2, you need to dilute a significant amount to raise these enough money. So for example, you go into quarter 2 with, let's say, 442 million. If your quarter 3 burns another 200 million again, you're at 242 million. Your minimum cash liquidity under your debt covenant is you need to have at least 100 million. You're dangerously low. That gives you no room to maneuver to do any sort of other plans. You want to acquire, for example, let's say you want to spend more money to take over maybe chunks of Cineworld, some of the Regal cinemas. We know that we saw news saying that they denied any talks occurred. That's what Cineworld said. AMC said they did. Cineworld says otherwise. But regardless, if you want to better position yourself, perhaps, you want to take over more of their well-performing theaters, well, you need money, you need cash in that war chest to do so. You want to look at other revenue streams that you need to have money to spend. So dilution would need to happen regardless. So, but the question becomes, as I stated before, are you going to allow the dilution to occur through AMC plus APE combined, that vehicle? Or are you going to just allow it through APE? If you want to raise $200 million worth, let's say a quarter's worth of cash burn, you want to buy 200 million, you need $200 million of cash. If APE trades at $2 per share, then how much do you need to dilute? You need to dilute another 100 million shares. If this proposal doesn't go through, you're currently sitting with APE at about 702 million APE, provided there's no other significant dilution that occurred. That's how much outstanding APE there is. So you have now added, you went from 700, let's just round down, keep it simple, 700 million. You increase that to 800 million. So what's that percentage? Or let's say that of 700 million. 14%. You're diluting the overall amount by 14%. So the value of your APE will go down. You're diluting it. And you've given away another significant portion of your company at pennies on the dollar. But if you choose to do that combination of APE and AMC, you're getting rid of that disparity. You now no longer need to sell your APE shares at $2, let's say whatever, $2 per share. And in combination with the reverse split, let's ballpark and let's say you can sell your shares initially when it, let's say it goes up to $60. Combined value with a 10-to-1, they're at $60. Sure, you might not be able to sell all your shares at 60, but let's say you sell your shares at $40 per share. How much dilution do you need to raise the same 200 million? So 200 million divided by 40. Obviously, this is not a cash amount that needs to be done. Let's do it by numbers. Oops, yes. Only 5 million shares diluted. if your overall float was, let's say, about 150 million shares, you only need to do 5 million. What is 5 million of 150 million? About 3%. You'll need to dilute 3% of your company to raise that same amount of money. So this is not telling anyone how to vote, how you should vote. I'm just showing you the math, showing you the data. From the way I interpret things, from the way I see their business model, their financials, the company will burn money in quarter four 2022. I think that's a given. I think they'll burn around $215 million for quarter four 2022. I think that quarter one 2023, they'll burn another approximately probably another $200 million. The best case scenario, you have quarter two 2023 at a break even. And come quarter three of 2023, you're going to have another cash burn quarter. So sometime in the first couple months of 2023, I think that they'll need to do more dilution. You're not going to wait until your cash drops to that $200-300 million level. You wouldn't want your liquidity to be that low. You want to have money in the war chest before it falls anywhere near that. So it's going to come down to how will you raise that money? And I think that if you think of it from the company's perspective, you want to raise as much money as you can to survive by giving less percentage of your company away. I believe that if you don't allow for the combination of APE and AMC, do the reverse split, authorize more shares to be diluted, AMC is going to be forced to sell it through APE. And because APE is trading at such a big disparity to Class A common shares of AMC, you're going to give away large controlling interest of your company. Versus if you're able to combine that, eliminate that disparity. Now, either way, that dilution for your company is not, short-term wise, it's not good because there's more shares that exist of your company, meaning each of your shares is technically worth less in value. But if you're able to generate money, equity, fresh capital, so that you can continue to operate your company, and hopefully the movie industry recovers so that finally maybe you hit a break even, you turn a quarter with positive cash flow, with net profits, then you don't have to do that dilution. Then the potential thoughts of, hey, maybe they want to do a share buyback, they want to do dividends, etc. That stuff could come out. But that's on a big assumption that finally they're able to cut down their operating costs. They're able to trim down their theaters. They're able to trim the theaters that aren't profitable or less profitable, add ones that are more profitable. They're able to increase their profit margins, whether that's from their concession stands or maybe from their ticket revenue, and attract more people, generate more foot traffic to come to your company. You don't need to do your Tuesday $5 movie ticket sales. You don't need to do discounts on your concessions. You don't need to do like a 50% sale on your discount on your popcorn. You don't need to do promotions of giving free popcorn to your Investor Connect members, etc. That's what would need to occur. So the way I see things, in the best interest of the company, you'd want those votes to go through. You want the votes to say yes. And another point that I've been talking about that some people disagree with me on is the fact that their vote counts. I hate to be a negative Nancy, but I just want to share the numbers. I'm giving rough calculations, rough estimates right now. We know Antera owns, if you look at the filing, where is it? Do I have it pulled up? No, let's pull it up right now. Let's pull up their filing. Their total controlling interest, if you scroll down, Mr. Gulati has power over 61.8 million APE right now. 61.8 million APE. That represents currently 8.8% of outstanding APE. They'll have more voting power if that deal goes through. So remember that they'll get approximately 106 million more shares to that second tranche. They'll have to pay $75.1 million. And if they do the debt equity swap, they'll get another approximately 91 million more shares. So they'll have 257 million shares of APE. That's a significant amount of APE. If we use the updated figures, 257 million, 257 divided by outstanding APE. Hold on. So that must not be the right figure. That was total shares. Hold on. That plus that plus that. Sorry about that. So 257 divided by that. They would own nearly 28.6% of APE. There could be more dilution that occurs from when that deal was done until the shareholder meeting, but approximately they would own about 28% of APE. That's a significant portion voting block. And they're going to vote for the proposal. Now let's pull up my, hold on, is it? ETF tracking along with 13Fs. We know that as of ending 2022, Vanguard was holding on to nearly 49 million shares of AMC. We look at the 13Fs. If these haven't significantly changed, that alone, those top 10 firms hold another 100 million shares of AMC alone. That out of 516 million approximate, that's nearly 20% of voting block of AMC Class A common shares. If they hold the same number of APE because they held onto their AMC shares before AMC offered that special dividend, then that means there's another 100 million shares of APE to consider. So what's that total percentage now? Plus 100 million. That divided by that. That means nearly 40% alone of APE would be voting for yes, just in the APE. And basically 20% alone will be voting yes in AMC, Class A common shares. They're going to most likely have, the institutions will have a voting majority. They will have that power to have that majority to vote yes on all the proposals. So that's why I think that it doesn't matter how retail votes, because the vote is already set. My thought is that these proposals by the board, this wouldn't have even been proposed if they did not think the votes were there. I don't think AMC would have proposed this. I don't think Antera would have gone through this deal if they didn't think the vote wouldn't go through. And another thing to consider is that, remember, Antera is only a part of the agreement. They agreed to hold their APE for up to 90 days and vote them at the special meeting in favor of the proposals. So what happens? Let's say worst case then, somehow the votes don't go through. If that doesn't go through, will Antera continue to hold all that APE? No, we know that Antera was already shorting the company beforehand. We know Antera is a bondholder of AMC. It's more likely that, you know what, Antera is going to dump that APE. That 61 million plus that they hold, they would dump all that APE. And then what occurs? When you need to raise money for your war chest, your APE is going to be significantly lower. You have a firm, an institution, a short hedge fund that's going to be dumping millions of shares of APE. Will there be another institution on the other side to be buying that up? Is there going to be enough buying pressure from retail to push that price back up? I doubt it. So that's going to further hinder your ability, but it's going to further hinder the ability for AMC as a company to raise capital. You're not going to be able to raise capital selling APE at $2. You might be back to square one, or almost square zero, where, yeah, you're now selling APE back again at the 50, 60 cent range. So how many more shares of APE now do you need to authorize? So all the folks who had APE, bought APE at $9, $8, $7, $6, $5, when you're going to dilute 200, 300, 400 million APE units just to raise, let's say, $200 million of a quarter's worth of cash burn, that's seriously going to hurt. That's the way I view things. Now, I know some of the people voting against the conversion, the common theme I hear is that, you know what? Once you do the reverse split, once you allow for the combination, they're just going to short it down. That type of argument for me doesn't make sense. If you're under the belief that they're going to, illegally short it, naked short it, what's the difference between them shorting it at, if the reverse stock split goes through and it's $60 a share, versus AMC is at whatever $5, $6, and APE is at dollar whatever $1.50. What's the difference? All in all, you would think that when you have a lower float, when you have less shares available, maybe you have a situation where now maybe the cost to borrow, something I don't like to really use, but nonetheless, in your hypothetical situation, with a lower float, less shares available to borrow, maybe it becomes more expensive to borrow. Instead of that whatever 100%, 200%, maybe that rate skyrockets. So it's 500%, 600%, whatever. It would make sense that, okay, now to short one share of AMC, if the total outstanding is around whatever 150 million, yeah, you have to borrow a share at $50, pay a whatever 300, 400, 500% borrow fee annualized. Yeah, you don't have to borrow as many shares for that same value, but hey, that initial cost value is much higher for a single share. All in all, if you want to help push out to defeat the short thesis, you need to allow for the company to survive. You need a way for the company to, in terms of Adam Aron, to do smart dilution. You need a way for the company to allow for dilution with the least amount of giving ownership to other folks and raise the most amount of capital that it can. And I think that when you vote no, you hamper the ability for AMC to raise equity. APE is not a very good vehicle for them to currently raise equity. This is just merely a move to help remove this price discrepancy that occurs between AMC and APE. You don't have to sell shares of APE at pennies on the dollar. You don't have to sell it at 50, 60 cents. You can sell now your AMC reverse split adjusted, whatever, $50, $40. And that's just my thought. And that's the math that I think that goes behind it. We'll just have to see how the exact conversion ratio would look like once the definitive, the proxy statements and all that go out. But based on looking at the financials, it's almost a given that dilution will occur in the next 6 months, unless suddenly movies do absolutely amazing. But current projections, we can look at how January is doing. We can look at the movies coming out in February and March. And we can see that Q1 will most likely be another cash burn month, or cash burn quarter, Q1 2023. And the company will not want to watch their liquidity get dangerously low. So for them to raise capital in a more efficient, effective way, having that vote, having that recombination, having that reverse split will allow for do that. Either way, I think the company's in a bad situation. The company's burning money hand over fist. But what's the worst? What's the least worst option out of the two? I would say that it looks like, number-wise, you run the numbers, allowing them to dilute after you do a recombination, reverse split, would make more sense to me. You're giving less ownership of the company away and raise more money. You block their ability to combine AMC and APE. You block their ability to reverse split. Well, then you're forced to dilute APE further. And you're basically opening it up for firms like Antera, other short hedge funds, to suppress APE, and they're just going to significantly hinder your ability to raise equity so that you're going to run out. And your company may run out of money before the box office, the domestic box office industry, the movie industry, to fully recover. It's all a time game. Can AMC buy enough time to survive? Will they be in business long enough for them to see the box office recover back to pre-pandemic levels? Will they be able to survive until they see box office is back at $11 billion a year when it's at $3 billion a quarter? So your thought as an investor is, what gives AMC the best chance? Because you lose all your equity, you lose all your value in your shares if the company goes under. So that's just my thoughts. I'm in no way, shape or form telling you how to vote. I'm just showing you, I see these numbers. I see how this is how I project the numbers will be on the financial statements on a general basis, based on the news I see, based on the filings I see, and giving you my rational thoughts, my thought process behind what I think would occur. But it's all up to you folks to decide. I would say everyone, if you're a shareholder, you really need to think about how you want to vote. You need to look at the numbers. You need to do your DD. And I'm putting forth all the numbers for you to clearly see. You can pull up all the financial statements, and I'd say you should go to the SEC Edgar website, pull up the filings, pull up the 10Qs. Read the different 8K filings. Read the forward purchase agreement with Antera. Look at how Antera was. Oops, where is it? Where are you? Look at what Antera was doing. Look at how they were shorting it. Gather the information and then analyze it and then make your choice. That's what you would think as a shareholder you want to do. You want to get all the information you can from relevant, reputable sources and make the choice that nets you the result that you want. But that's just me. But anyways, that's where I'm going to end the video here, folks. This one's a pretty long one. That's why I decided to do it as a separate video. If you got any questions, comments, concerns, etc., leave them down below. Do my best to answer your questions. And please, if you like the content, if you like the perspective that I bring, the information I bring, how I show you the sources, etc., please hit the like. And please, to help the channel, hit the subscribe, share it with other folks. And if you want to debate it, if you think I got something wrong, please let me know. And I'm disclosing that I have no position in this company. I don't have any shares of AMC, APE, no options of AMC, APE, none of it. I'm just looking at it, neutral observer, seeing the data in front of me and analyzing it. I'm just giving thoughts of what I think would occur. Not telling you what to do. I'm just giving my perspective of what I would do if I'm an investor. Just showing you the logical steps I would be thinking. But yeah, until next time, folks, hope you have a great evening. This is Shadow Stars signing out. Peace.